Hello and welcome to the show, Tamal. Let's start with your this week's column, which is about bond, long-term government bond. And you mentioned that there's a positive for India. And what's the global scenario like?
Well, this is the first 50-year bond by Reserve Bank of India. And we discussed in the column that how globally, most of the OECD's countries have between 30 and 100-year-old bonds. And then the column also talks about the countries which have gone into it in the recent past, meaning I'm talking about in the last decade, towards the end of last decade, when the interest rate was probably all-time low for most of the countries, Austria, or there are multiple names of there. So those bonds came in the picture. Israel, Mexico, Peru, even Argentina, and many more. But what happened is this: as the interest rate rose, which happened early this year and from next year on, from last year onwards. So the bond investors had to bear huge losses because, as you know, the bond yield had been rising till recently, and as the yield rises, the price goes down. So that's a problem. Apart from the credit risk, which turns NPA when borrowing account, the interest rate risk, which hits you hard in the bond market, that has happened in the recent past. But Indian story is slightly different because in our case, the inflation is not that high, which most of the other developed countries faced. And also the hike in interest rate is much more, I would say, moderate than the other countries. So in this context, and of course, our economy has been growing, the fastest growing economy we are talking about by 2028 or by 2030 became the world's third largest economy. So in that case, it's a good step by the Reserve Bank of India to have a 50-year bond, because what happened is this. I would say this is helpful for the government because the gross borrowing program does not rise too much. You can continue with that kind of stuff, long bonds, and the insurance companies, particularly the pension funds. When we are talking about insurance for all, and they need long-term investment. And so in that context, long bonds is an excellent platform. And of course, it will encourage the corporations also to get into the longer format of this kind of instrument, which will, for infrastructure financing, etc., will come in. So overall, I would think when the rest of the world is struggling with the long bonds, in Indian context, it's the appropriate instrument that the banking regulator has introduced. I wish it would have even come early. Should have come
early. So let's stay on the topic of financial markets. Now, last week, RBI Deputy Governor Rajeshwar Rao said, and he talked about the banks of tomorrow. So what are your thoughts on that?
No, that's, he touched upon a very critical, important and sensitive issue. The banks need to change themselves. Now, we have been often discussed, do banks need to behave like a tech companies? Do they transform into tech companies? But that's not the case. Most bankers feel that because banking is all about trust. Banks takes your money and my money. So I would not trust a tech company. So which means what? The banks must be run by the banker, but the infrastructure, the logistics of banking, as well as the customer-facing part of it, even internal part of it, both has to be technology-driven. So that's the new reality. In fact, Rajeshwar Rao spoke about how the banking will become could soon become a service which will be offered by others as well. So essentially, the role of technology. So that's the important part, and that's a very real part. I mean, as you know, that particularly the non-banking space, we are seeing all the use of technology and the loan apps, etc., which will help you. It's another story. It sometimes has been misused, but there is no escape from the technology part. And the bankers and the banking industry, or rather the entire lending industry, need to prepare to face the new reality. There is absolutely no escape.
Right. So a lot to think about there, of course. And of course, another thing that we've been a lot thinking about and talking about is lending. The latest was Finance Minister Nirmala Sitharaman telling and advising SFBs and NBFCs to not go too far too soon. What do you think is happening there?
No, Swapnil, if you have noticed in the recent past, I am talking about the last 15 days, both the banking regulator as well as the finance ministry have been issuing concerns and to some extent warning also against the irrational exuberance in lending, particularly in one space, the personal loan, unsecured personal loans. Now, we have been talking about personal loans up to 50,000. We have been talking about personal loans about 10,000. Around 10,000, but even 500 and 1,000 and 2,000 rupees kind of loan with some of the loan apps. Now, to make a correction, if the loan apps are not certified or or approved by Reserve Bank of India, it's the NBFC. If you are a bank or an NBFC, you can have your loan apps, right? So some of those NBFCs, the loan apps, I understand that they're giving loans for 500 rupees. Now the question is, where is the money going? Is this money going to buy pizza? Is this money going to buy some medicine? Or is this money going to play gaming apps, etc.? There you speculate and make more money, or getting into stock market. And as we speak, last week the IPO is so close to 4 trillion rupees. Those IPOs gathered. That's kind of subscription sale. Now we are talking about negative liquidity in the system, and there the IPO is drawing 3.8 trillion money. So where is the money coming from? So I think if the concern is right, both by the ministry and Reserve Bank of India, probably the money is not being used for the purpose for which it is meant. Probably the money is being channeled into speculative activities like the gaming and stock market. Earlier it was crypto, so on and so forth. So if indeed that's the case, then it needs to be tightened, which is why Reserve Bank of India raised the capital requirement from 100% to 125%. And I would like to believe that probably there will be more steps coming in to rein in, because particularly what's happening in the NBFC sector, some of the bigger NBFCs are getting into the game of arbitraging. They are taking money from banks, passing on to the smaller NBFCs. All sorts of things are happening. And this is the classic irrational exuberance.
Right. So caution.
Right.
Right. Indeed. And caution indeed is important, is what you are saying. So thank you so much. Thank you so much for joining us, Tamal, and sharing all this with us. Thank you.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.